Hey everyone, Brian and Andrew Taco here from TnT Group, posting this webcast for NakedTrader.com. A lot of stuff happening overnight and early this morning. Brian, want to start it off?
Yeah, basically, kind of overnight, you got more austerity type things going on over in Greece, Portugal, the whole European Union type thing. Nothing really new and exciting there. But then the big news came out later that S&P has downgraded their outlook on the U.S. Debt situation. The funny thing is, first thing I heard of it, it was like, well, is that really a surprise? But I guess the market did take it as a surprise, which surprised me even more. We sit here every day, day in, day out, and go, well, everybody talks the same thing, everybody sees the same concerns, but the market doesn't react. So I was actually pretty surprised that the market did react the way it did. They didn't downgrade, but listening to the S&P guy today, if nothing really changes, they're possibly looking for a downgrade in the next, less than 2 years. So that's pretty big.
I mean, do you think this is something that could possibly ultimately break really that camel's back? And I mean, this could kind of be the down move all the bears have been looking for in the equities?
I mean, I've looked at so many things over the last year or two, and I thought they would have broken the camel's back, but I'm surprised we're still down here on the equities. I thought we would have made a rally back, at least like a 50% retracement. But this could be, I mean, people have been looking for a reason to get short. This could be the reason that they are getting short. Again, it's like, what the F? I mean, everybody knows this. I mean, you can see our debt. You can pull it up and watch the penny spin every freaking second. I mean, of course, but the big question, like I think they said on CNBC, is, well, how can we default when we can keep printing money? That's the question. And then to me, it was a shock then, why isn't the dollar selling off even more? But then the dollar rallies on it. So market movement, it makes sense at times. Like you watch what happened today, you watch your risk, type things. I mean, they did buy the dollar. They sold the equities, which doesn't make sense. But then if you throw Europe in there, that does make sense if they're concerned about, the risk over there. So your euro-yen spread, which we look at heavily, did come off huge, came off over 300 pips today. So there were things that kind of made sense. Grains were strong, oil was weak. Your gold was strong, your silver was weak.
We also did see China raise their reserve requirements also, which could really play into that oil. And I think tomorrow too with these equities, I think it's going to be a big day to see if we get any continuation with this down moves. Every day we have had down moves. The next day they've pretty much taken everything back. So I think tomorrow really might play into what you might see going forward.
Right, and this could be an interesting week, being it is a lot of people. This is their spring break. You got your Easter holiday Friday. My kids got Friday off and Monday off, so you could see it being a slow week where they could really do some damage since there's nobody in the market.
Yeah, and right now I'm currently short the S&Ps, trying to just stay and hold below that 1300 level. Also dollar, some pretty big resistance up at 75.98.5 as well as 76.05. So those are kind of areas that really held here, kind of the bottom in the euro and the top in that dollar. So be aware of those levels. That's it for me.
We are still long NASDAQ puts, still like being short the equity market in general, like being short the NASDAQ preferably more than anything. We are short equities, looking for a bounce up to get short more. And we were short bonds coming in today and got stopped out on them because of this news. But we're still kind of in that choppy area in the bond market. Staying above here though could start getting interesting, and they really put a move on these curves up and down today in the FOB. So keep an eye on that. Watch that euro-yen spread for a break below 2,000. Again, you could see another move down in the equities. Two other points I want to mention real fast, kind of just funny things. Check on our website for a video from Kramer. It's one of our friends, Joe. I want to say thanks for sending that out. Real interesting. You guys got to check it out. I'm not going to tell you what it's about, but it's worth looking into. Andrew will put it up on the website and just show you how much of a scumbag he is, and what a scumbag this whole freaking market is. Sorry, I almost swore there, but I hate it. I hate everybody. I hate the market. It's so stupid how everything works. The second point I want to point out on another reason you might want to get short the stock market, watch a freaking baseball game. There's nobody in the freaking stands. And I was having lunch with my neighbors, and they're 16 years old, and they're sitting around, we're eating dinner, and they're like, man, have you noticed how these baseball games are so bad? And it was so funny because I noticed the same thing. Don't know if it's the weather, don't know if it's economy, but I have a feeling it's the economy. Like me and Andrew were talking this morning. I mean, who can afford it? $400 or $500 to take your family to a baseball game? Right. It's got to stop. It's got to stop. This isn't football. People spend that for football, but you can't spend it on baseball. $1,000 to sit behind home plate. Go blow yourself. Brian DeHacco from TnT Group.
On that note, I'll talk to you guys later.